Hi, good morning. Today is October 3rd, 2019, approximately, let's just call it 6:30 a.m. Eastern Standard Time. My name is Olawale Okabola, Spartacus Trading Corporation, here to bring you a pre-market report. Please refer, and I cannot stress enough, please refer to my prep report for August 3rd. That'll get you caught up on what's going on with the bar charts. So I'm just going to spend a lot more time on the profile and especially the overnight inventory. Okay, so real quickly, yesterday we had that breakout from August low. We're talking a time frame higher than the day time frame. Okay, these are the folks that got the money, who pay attention to this time frame, who can move the market. All right, we got a breakout. We closed outside of August low. What happens is the market, uh, if the market gets back within August low, what do we have? We have excess beginning to develop thus far in this month. What am I saying? August low. I'm sorry. September's low. I apologize. September's low. I need to change my chart. I don't know why I said August. September's low. We can not afford to, um, or the market, or the shorts rather, the daytime shorts, right? Weaker hands. They cannot afford for the market to get back within August low due to the liquidation from yesterday. 49-point range, close to 4 billion or thereabouts, 4 billion. Let me adjust that. I don't know why I'm saying August low this whole week. I've been getting my references crossed. Please forgive me. Got a lot going on personally. All right. But I'm back on my game. All right, so we cannot afford to get back the short term traders who's been short in this market. They cannot afford for the market to get acceptance above September's low. Getting acceptance above September's low now puts pressure on these folks who shorted from the rally high because the market was one time frame and lower, made the low in G period. The market started to one time frame higher. This is more than likely short covering. We put a high in L and they banged it again and they got what they were looking for. So they're all fat and happy, right? They're looking for more continuation to the downside. That's what needs to happen for them to stay in their trade if they did not already cover their trade. They're looking for continuation to the downside. So now let's talk about the overnight inventory. Right now, the overnight inventory at 6:30 in the morning Eastern Time, Standard Time. Here's a settle, screen box. Overnight inventory is long. No matter how many times they tried to push the market down, the market bounced right back up. That's a signal that the market is not as weak as price at the close will lead you to believe. Doesn't mean we still can't trade lower, but it's just letting you know it's not as weak. In the overnight, we're technically long. Okay, so overnight inventory, if say for example we open right now, it's long. Here's the nuance. With long overnight inventory, more than likely or usually you'll expect some kind of adjustment. Maybe not a full correction. A correction is taking out the overnight low, taking back all of the gains in the overnight. That's a correction. An adjustment is usually adjusting maybe to the overnight half back there about somewhere and balancing or going whatever way it wants to go. At a minimum, you usually would expect an adjustment to overnight inventory, um, especially if it's long in a situation like this. If you don't get that adjustment, not to even mention a correction, if we don't get an adjustment, that's putting pressure on these folks at the rally high because they're the last ones who are holding the bags, more than like holding the bag. More than likely, they're laggard shorts. And if they didn't exit their position, their stops up here. If their stops up there, you got all this light volume. You see it, all this light volume. It's really not a solid stop. They could then become buyers if those stops are hit. They become buyers. Buyers in light volume. We got a short covering rally on the way. What's the first clue? As I mentioned on yesterday's report, We're opening and we're staying above September's low. I think on the report yesterday I said August low. Forgive me. Okay, I'm back on my game. We're going to stay above September's low. That's putting pressure on them. And then we can't get that adjustment. They're going to look to cover if they didn't already take their positions off. Okay. If you were short and you were holding on, what do you want to see? You want to at least see us take out the settle. You want to at least see us take out the overnight low, wherever the overnight low is going to be. I don't know. You want to at least take out the value area low. And then you want to take out yesterday's low and stay below yesterday's low. That'll signal one time framing. We're still moving lower. Bar chart. That will signal one time. That will signal one time framing, and we're still trading lower. If we're not trading lower, if we begin to trade in and out, so let's just say they get what they want, we get an adjustment, and the market begins to trade lower. We get a correction, get outside wherever it opens. We can begin to trade in and out of yesterday's range. Better be careful because we could get an adjustment to the inventory. Now, let me add a nuance. Let's say, for example, I'm doing my best to have you guys prepared for today's trade. Let's say, for example, this white line. Let's say this is where the overnight, the market opens at 9:30 Eastern Standard Time. So that means overnight inventory is technically long because we're above, by theory, we're above the settle. This is Asia in the white. In the blue is Europe. That means in Europe, the market had to liquidate because you see where we are. So even though by theory the overnight inventory is long because we're above the settle, technically when you factor in the nuance, we're short. Long but short. Short from Europe. These folks short from Europe, they're looking to press the market from the Europe session, right? Whoever's trading European session, they're looking to press the market. If they can't get, what do they want to see? If they can't get outside of value area low, get outside of yesterday's low and stay out, they're going to look to cover their position because they've been shorting from the European session. Although we came in long, they can't get what they want. They're going to cover. That brings in the adjustment to the overnight inventory. So the overnight inventory today, it's very, very key to, at least in the morning session, uh, setting the tone for today. For example, if we open here today, if we open somewhere here, we can't get below the September's low any acceptance. More than likely, it's going to be pressure. We can get a short covering rally. I'm not predicting. I'm just reading what I'm seeing. We can get a short covering rally, and then it's on. What you want to see, value begin to develop, at least at a minimum, overlapping the rally high. That would get you overlapping a higher value. If not, seeing value develop clearly higher above this reference. The only way that's going to happen, one time framing higher. So you want to monitor that. If we get back up in here, you can one time frame higher. You can get a double distribution because, as you can see, it's nothing but light volume. That's what's going on. So I hope I'm not confusing you. You gotta be you gotta be Johnny on the spot. You gotta understand exactly the disposition of the overnight inventory and the possibilities of what can happen and know what to look for. This is Olawale Okabola with Spartacus Trading Corporation. Hopefully, I did not confuse you. If I did, forgive me. Please watch this video again so you can understand what's going on and how you can get yourself on the right side of the trade. Have a good day, everybody.